I've been in crypto for almost a decade and I lost over $65,000 getting there. So by the end of this video, you'll actually learn from all of the mistakes I made so you don't have to make them yourself. Now, real quick on who I am, because this is going to change how you see this video. So my name is Arno Vanmassenhove, and before I ever got into any of this coaching, I made over $1.5 million by the age of 25 myself. So this video is about boiling a decade of that experience into 25 simple lessons so you can learn and apply them into your life today. So the first finding is just gathering info to feel productive on paper. The hesitation you have has a price tag, and I never figured this out for myself. I always had this utopic belief that if I just Googled more and gathered more, I was gonna get there. And the reality was, it was not the way there. The second one is the right moment does not exist. As I'm recording this video, everybody has their own story. It took multiple steps on top of this entire ladder from bottom to where I'm at right now to be able to master every single level. But the point is that there is never a best moment. The best moments that I had throughout my entire storyline were the moments where doubts were massively high, but I was still going for it. The third finding is that doing nothing is not neutral. When you feel like you're standing still, when you feel like you're stuck, every single second you have this feeling, you're actually bleeding opportunity. Next up, I want to mention that trading is a waste of time. Only 1% of all traders out there actually succeed. So my fourth finding is that my approach was part of the problem. I had this utopic belief that I just needed to day trade the markets and that I just needed to take 1% a day. You simply can't track these markets. You can't time them. You can't predict them. Before you think you know the next top of a market, another war kicks in, another ceasefire gets broken. Nobody times the bottom or the top. The next finding number 5, is that brokers are one big, massive scam. The minute you need to sign yourself up with some sort of a meta trader related to a company or a Forex type of thing, the minute that type of stuff happens, you are on your highway to getting broke. For that reason, the sixth finding is actually that leverage and prediction are rigged by design. There is no way you can predict markets where the biggest asset managers on earth have already implemented AI software to trade against you and eliminate every single move. Because last week alone, I saw over 100,000 traders to get liquidated. Just simply look at this. This is a normal day in crypto. We're looking at the 24-hour rect. We're seeing so many liquidations, over 237 million.88. And one of the biggest reasons this is still possible today is because most people don't have a simple plan to enter and exit the markets. They're either too afraid to enter or they're too deep into the euphoria feeling of getting higher that they never take a single profit. For that reason, emotion is the biggest cost in this entire game, and Wall Street has the opportunity to manufacture every single side of it. So the way to beat that is to dollar cost average your way into the markets and ladder your way outside of them. Besides that, the market is going sideways for 80% of the time. And this is the moment where people leave because it gets boring. They see their stocks doing something, S&P doing something, but on paper, they're never really beating that 11%. So if you know how to position yourself, you will learn that throughout that sideways movement, people like myself are nothing but satisfied because we are printing fees while the majority of people are just nothing but waiting. So at last, I believe that extreme fear is the window to enter. When your friends would call you a psychopath to even consider anything in relation to crypto right now, that's when you know this is your moment to consider. And even though at the time of this recording, I think what we're going to see right now is a relief rally in July, then we're going to see some sort of a dump like we've seen it in the summer of 2022 on both Bitcoin as well as obviously altcoins, creating their new dip before we bottom out around September to October. And that's when a new rally, so-called bull run, starts to take off. So just to get back to the point, when I got serious about something like this, investing, crypto, making money online, I opened up a Google sheet and I compared basically every single option out there. Think about dropshipping, e-commerce, Amazon FBA, Forex, trading, stocks, real estate, Airbnb, faceless YouTube channels, theme pages, you name it, AI agents. I put them all in a sheet. And the biggest conclusion that I managed to get was that all of them were nothing but a second job. So the point is that crypto essentially won for me. And for a lot of people, it might not have won. For a lot of people, it might be something they would never want to come back to because they see it like a volatile asset class, never really being able to position themselves in time and not understanding how to make money from market volume, like transactional volume, as opposed to prices. With this new finding in mind, they look for fancy stuff like automated contracts, but these things carry the biggest risks. The minute you have some sort of a smart contract where you have a token and the smart contract allows you to automate something about it, when you buy it, when you sell it. But the minute it gets fancy, automated, like you can set it up once and forget about it, that's when you carry the highest type of risk. It all sounds so damn smart to build this AI trading bot until you ask one thing to a bunch of different AIs, could be the same, and then get 4 different answers each and every time. The thing is, it's not as biased as code will be. It's not as effective as any other model out there. So what you would need instead is a way to collectively make money from all of the fees that are being paid on a 24/7 level for people that move their crypto from one point to another. Next up, I want you to know that crypto is nothing more than a gym. It's as boring as a gym is. Most people hype it up. This is the news about this next Bitcoin. Here's the hype. Here's this. Here's that. The world is on fire right now. There's been consequences in the Middle East, ceasefires, all that stuff. The thing is simple. Crypto is all about consistent habits, about tracking your fees that you're collecting pretty well enough over a long enough time span for you to win. For that reason, I believe 80% of the work in crypto is the preparation. It's right now during this point in the market where things are a little bit less exciting that you can accumulate those fees that compound continuously as the cycle come back in the 20% that is left. When I say 20%, I don't mean to say that the bull run is going to get shorter. However, when the bull run kicks off for a couple of years, the minute you've accumulated yourself and you've built your backs, that's when the next phase is just a matter of holding on to those assets, getting those exits, and actually making sure that you consistently compound. Nothing changes. However, the direction does, and that's when you need to get out of the market across the time span this bull run takes. The next finding is that if you skip the prep, you skip the result. There's no point in you not generating fees within an accumulation phase to just buy the top when the market euphoria is back, because you're going to get used as exit liquidity by the bigger players, by the whales, by the banks, by the institutions. The minute the news start to shout it's interesting to get into crypto again, you're too late. Look up Bitcoin, look up Ethereum, both in Google search trends, pull up the chart, pull up the news. It's always the same. People only show interest when the narrative comes back. Winners show it way before the narrative even exists. And then the next thing you truly want to focus on is the units that you're stacking rather than the dollar value, because markets move. A stock market moves, a crypto market moves, an ISM business cycle moves, a 4-year cycle moves. The most important thing is if we talk about, for example, Bitcoin, we're looking at Satoshis. If we're looking at the decimals of Ethereum, we're looking at those decimals of Ethereum. The whole point I'm trying to bring home is people are way too overly focused on the dollar value rather than getting a fee earning system where they can generate more Satoshis, more decimals, more whatever, so that over time when these markets start to go up again, this compound effect of everything puts you way ahead of where you even started in the first place. You are stacking the asset, not the cash. That is a huge one. It's not about the dollars you see on the screen. It's about the units of crypto that you're able to accumulate when the markets allow you to do so. So next, it's very interesting to know that 80% of your capital could be devoted towards growth. These could be stable pairs that generate 4 times as much as money loses, alongside of the 20% that gets devoted towards a liquid holding back. And at last, I had a student that was sitting on the back of Bitcoin for a while prior to joining me and working together, and idle capital, that money that just sits still, is losing. Whether that's on a bank account where it's just standing still, losing 3% to price inflation, 8% to monetary supply increases, or it's in Bitcoin where you're just waiting for Bitcoin to finally get back above 100K. The whole point about this is as long as you're standing still, you're not just losing value to inflation, you're losing opportunity that now the exchange you're parking the money on is making while you could actually be out earning them. Another belief I have is that holding a position is not where the danger is, exiting it actually is. For example, if we look at the digital ATM model and we go a little bit wider on the actual size of what the ATM model looks like. For example, we tell the markets the price can actually move a little bit more as opposed to going very, very tight just to make more money. that's when actually we're going to retain these types of positions longer and longer. One of my positions has been retaining itself for the last 3 months. It's only a couple of days ago on Sunday that I was able to tell myself like, hey, I'm going to get out of this position. The reality is that my entire position translated itself into stable coins, making a profit in the dollar value, allowing myself to actually come out with more money than my initials, fees on top of that, and now this new moment for myself to think, okay, how am I going to re-strategize my play? But when you go a little bit tighter, just for the sake of making more money, you're going to get to a point in time where you're going to have to babysit your positions 24/7. So on paper, you're going to make more money, but the increased chances of getting through the bottom of the position or getting through the top are going to increase. Your security is your job. And all of the horror stories that you hear out there are just a logical action reaction type thing. Guy losing all his Bitcoin on a hard drive. Who puts his Bitcoin on a hard drive? A guy getting hacked in the airport on public Wi-Fi? Who does crypto on a laptop on public Wi-Fi within an airport? It's always action reaction. Make sure your security has common sense. Because in the end, fear always equals a missing skill. If you're afraid about security, that means you don't know how to secure your assets. If you're afraid about volatility, the ebbs and flows of the markets, then that means you're still reliant on prices instead of making money from transactional 24/7 volume. And the list goes on and on and on. Because just look at the math. Imagine you have about a $10,000 in cash right now. You're losing about $1,100 every single year. 11% recap, 3% to price inflation, 8% to the constant increases of the monetary supply. You can look up the USM2. If we look at a bag of $100,000, people always think more money means less problems. Well, instead, it's the opposite. You're losing a crazy amount of 11,000 euros every single year. And if we look at €1 million in cash, we're even looking at 110,000 euros every single year. So when you believe making more money and just getting to this new thing that is this side hustle, that is this business that will fix it eventually, it's not true. The more money you end up making is the more money you end up losing. When I went from 4 figures to 5 figures to 6 figures to 7 figures, I consistently saw that reflecting in the world around me. Everything gets more expensive unless you find a way to make your money work harder for you. Money itself is the issue, and there's not a lot of vehicles left that can beat what it's losing today. Look at a savings account, barely cuts what it loses, like 11% a year on inflation. Maybe if you're lucky, 1% a year on the account. If it's 3 or 4, still, that's a headache. Same goes for the S&P 500. We're looking at 12% a year. These are averages, by the way. Yes, there's been better years, but again, this is only 1% on top of what money loses. Real estate, 11.5%, maybe 0.5% of a benefit. Sure, there's ways to get the returns to be higher, but then again, what are you truly making as opposed to the bleed? Same with the Roth IRA at 12%. It's only like a 1% difference. It is an issue. It is a headache. So where does that leave us? Well, finding 24 is that the cycle got pushed, it didn't get broken. In 2021, monetary policy got shifted so that debt buybacks and the end date for that got moved all the way, pushed back to 2026, 2027, which is why 2025 in general has been quite of a calm year for crypto alongside of the 4-year cycle thesis for Bitcoin. Until we meet singularity with AI, crypto is just going to keep thriving because with all this debt in the world, with the issues in the GDP, people getting older, productivity going down, AI getting a little bit more effective at the whole thing, we need to keep printing more money. And as monetary policy keeps shifting, as the Fed keeps making certain decisions, whether they say they're going to hike or not, it's always going to be the same thing. They need to print more money. Just to end this video, one thing I wish I could teach my past self, and this could be you, is that I dropped my skepticism sooner. I simply did not have the right sources back at the time. There was not a single mentor that was trustworthy to me. Was not somebody that really inspired me or had the experience I was looking for. So I dropped everything, locked in for almost a decade, did everything I could do and became the mentor I never had. So as you made it to the end of this video, here's your next free step. I made a free guide with all these 25 lessons and findings that I had bundled into a simple PDF alongside of tools, tools and relevant videos I think you'll like that will massively help you in your journey of making passive income online. So first thing to do is go down below this video to find the link in the comments and the description. Next up, send your membership request right now. You'll be able to do a membership request where there's going to be a bunch of questions that you need to fill out. As soon as you answer them, your request will be able to get sent to me. At last, just know it's first come, first served. I'm massively capping the amount of people that I'm letting in because this is not my goal to make it a massively huge community. I just want it to be about a select amount of people from all around the world, like-minded, here to make money online. So if that's you, go down below this video. Your free PDF is waiting for you. And yeah, I mean, if you like the video, let me know what you'd like the next video to be about. Subscribe to the channel if you didn't do it yet, and see you soon. Take care, enjoy the PDF, and bye-bye.